flagship store in the heart of Manhattan. Give me a hot glaze, please, right now. The new Krispy Kreme in Times Square. It's 4,500 square feet and includes stadium-style seating. It has a pickup window, open 24 hours a day. Now, for those of you who are not Krispy Kremers, you look for the red light. It's located on the storefront. When it turns on, that means the workers have just finished. Sorry, I'm weeping. They've just finished baking a fresh batch of glazed donuts, so they're hot. You bite into them, it's like biting into a cloud.
And it's not that many calories, right?
What do we say, 140?
Something like that. Not bad at all.
You can have 10 of them, and that's your food for the day.
Hello, investors, and welcome back to Just Randy Stocks. Some breaking news, which I think really puts Krispy Kreme in a good spotlight for a more successful IPO launch. You can see here on my screen, Krispy Kreme prices IPO at $17 a share, well below range. The range was previously $21 to $24, so this is a big deal, and this could make the IPO launch a lot more successful, and I think these guys are smart. I think they know what they're doing, and I think that this is something that you should definitely take another consideration. Now, that price range previously, I was like, wait until it gets under 20. I wasn't having. So Krispy Kreme sold 29.4 million shares at $17 a share, well below the expected range of 21 to 24. The Krispy Kreme IPO raised $500 million. The company also said it granted the underwriters a 30-day option to buy an extra 4 million shares of its common stock. Shares will trade under the NASDAQ Global Select Market ticker, which you guys already know, DNUT, and people are blowing up this ticker symbol. I think it's hilarious. So the biggest thing I want to say here is pay attention to these underwriters. JP Morgan, Morgan Stanley, Bank of America Securities. I believe there was 19 different underwriters. Citigroup. These guys do not want an unsuccessful IPO launch. So I believe that's why the price dropped down. They knew that this 21 to 24 range. And also, I just want to make sure, let's take a look real quick. This flagship location in New York City, take a look at some of these pictures. There were lines. Now, of course, this was in 2020, but check this out. The store setup, the merch, the open box. I mean, down in Times Square, these guys are trying to re-image themselves. And like I was saying in my previous video, if you didn't check it out for Krispy Kreme, check it out because, you know, obviously finances weren't headed in the right direction, but I believe there were some reasons to justify. I just want to make sure you guys get in at the right price. And $17, I mean, like I was saying, I know I didn't do the financial analysis side by side with Dunkin' Donuts, but Dunkin' Donuts had a 52-week low of $38 and a high of $85. Now, of course, it ran up after they were bought out and went private, but I mean, $38, I potentially could see this $1.1 billion company sales, you know, expanding into those markets, hitting these U.S. Locations and really driving revenue. And you want to get in before they talk about that global expansion, additional global expansion in those key areas like China especially. So I think they've learned a lot of lessons. Of course, they're not profitable. 83-year-old company that seems to be turning around. So $17, put this on your radar. That's all I have for this update video, and I'll see you guys in the next one.